Hey guys, Joel Frank here, market analyst for YouTrading, and we've just had the release of the most important piece of data of the week, US consumer price inflation for the month of July. So let's quickly, before we look at the market reaction, let's take a quick look at how the data came in. Well, first of all, you have the year-on-year rate of inflation, headline inflation, come in a little bit above expected, actually, 5.4% versus forecast for 4.3%, but that is unchanged on the month before. However, year-on-year rate of core CPI came in line with expectations, 4.3%, and that's down from 4.5% last month. Furthermore, you also had sizable drops in the month-on-month pace of price gains. So you can see here core CPI dropped to 0.3% price gains in the month of July. That's less than expected, 0.4%, and way down from 0.9% in June. Similarly, the month-on-month headline rate of inflation came in below June as well, 0.5%. So the market reaction to this has been a little bit dovish. We'll start off by looking at the dollar, which has weakened. As you can see, euro dollar's moved higher. Markets kind of interpreting this data as supporting the peak inflation narrative, the fact that inflation in the US has peaked, which relieves some of the pressure off the FOMC to start tightening start tightening policy. So that is why you're seeing the dollar weaken here. Just looking at euro dollar from a technical perspective, though, hasn't yet been able to break above this key area of resistance here, around 117.50. That is one to watch going forward. But going ahead, yeah, this is going to be your range, 117.50 to 11700. You've seen similar little moves higher in cable here, though the cable's not really trading at any key levels right now. And then dollar yen, it's kind of failed to pop through these highs set back in July in wake of that slightly weaker than expected data. Also seen gold move a little bit higher, but kind of similarly to euro dollar, hasn't been able to get above this resistance from an old area of support. This was the low from June 29th at 117.50, and we've struggled to get above that. And then look at this, look at stocks breaking out. Well, this is the futures in pre-market trade, but it looks like stocks are going to open at record levels just below 4,450 for the S&P 500. That is pretty impressive stuff. That's obviously a market that's confident that the Fed is not going to be in too much of a rush to taper its QE purchases in wake of that data. It looks like there's some relief in the market, some relief that inflation data wasn't too hot, and therefore worrying the Fed into tapering too fast. So that looks like why we're seeing this slightly dovish market reaction. But anyway, guys, hope you enjoyed the video, and I will see you all in the next one.